Okay, according to YouTube, we are live. Here's my screen. Here's my voice. Let me know if everything's functional. I would very much appreciate that. This is my second or third live stream with this new laptop setup. You all know the story, no internet at home, absolute nightmare, which is why I'm a bit paranoid about how well it's going to work. But if everything looks good and sounds good, then I'm happy. We've got some stuff to talk about. Nice to see familiar faces as always. Peter, Ryan, Liviu, Danny, Dumbo, Richard, of course. Hope you're all doing well. And Dixie as well. Already 17 likes on the video as well. Fantastic, gents. Thank you very much for your faith in this content. Hope all is well with you as well, Uzi. I don't know if I'm based. Don't know what that means. Internet. Yeah, I will thank I've already thanked my sister several times. And I treat them to restaurant food as well, in lieu of rent. So there we are. Okay, well, it's 7 o'clock UTC. Let's get started. First things first, thank you to Bybit for sponsoring Technical Roundup, the YouTube channel as well as the newsletter. Thanks to them, we keep everything free, uncensored, unmoderated. Really cool of them to let us do our thing with complete freedom. So their links are in the description below. Make sure to click them, check them out, show them some love. It is where I do my Bitcoin derivatives trading. They've got some more cool stuff and listings and whatever else coming up. So I wouldn't be sponsored by an entity I wouldn't use or don't have any experience with. So that's Bybit. Thank you to them. Second of all, we're almost at 10k subs. So if you have been reluctant this whole time to join the subscriber train, it'd be a fantastic time to do so. And with that said, I know you all hate the intro part. I do to some extent as well. So let's get straight to the analysis. We'll start with the month. We'll do top-down, monthly, weekly, daily, because by the time we'll do the next session, the monthly time frame will have closed or completed. So we're going to try to anticipate some of the possible closes and build reasonable trading plans for the weeks to come. And just take these bracelets off. They're very uncomfortable. Right, so we'll start with the monthly time frame. The levels clear as ever, okay? So the past price action, as uncertain as it may have seemed on lower time frames, for now, we're still shaping up to be reacting to a retest of support on the monthly time frame. So this is the level. You can see we had two closes above it and then came back to retest it in an uncomfortably deep fashion. Sure, if I were to show you just these three things on any other time frame, that, this is the level, this red box is the level, and we have these candles within it. Of course, no one would bat an eyelid and they would agree that this is a retest of support and nothing too unreasonable. Sure, a bit of a wick into support, but who hasn't seen that before? So those monthly technicals are still valid. As I've said before, I really think there's a time frame bias when it comes to these things, that when it comes to lower time frames, wicks and price spending, 2 or 3 candles at the level, all of those things we seem to have a tolerance or patience for when it comes to lower time frames. But on higher time frames, simply because it takes longer or because these wicks are maybe, several $100s as opposed to a couple of $100s, the moves take longer, the wicks are bigger, and this sort of creates a bias whereby we discard high time frame technicals and get chopped up in the interim, even though the overall picture may be clear sooner rather than later. That's just something to bear in mind with high time frame trading generally. The upside of it is that you get reasonably clear levels and reasonably paced markets to react to candle closes and make your decisions when it comes to levels. But the price to pay for those slower moving or more clear, arguably, characteristics is that the moves you have to stomach as chop are bigger, and also time-wise, price may take longer to resolve or to set up something clear before offering you a move. My personal way of coping with that, as I've discussed previously on live streams, is I have intraday or lower time frame trading strategies around high time frame levels, just to generate more trades and to let me get in and out and cater for shorter term trading. And if you were to just trade, for example, the monthly chart or just the weekly chart, you're not really going to get that many trade ideas if you're aiming for swings or meaningful moves. So even if you look at the current structure we're in, technically the market has been bullish for 2 months now on this time frame, because you had a close above the level on this month here. So that's what kind of triggered the bullish bias, if you will. You had a close above the level, still technically bullish. That's like a whole month of trading, right? And now coming up now, the second full month of trading is the retest of the level. So while the big picture hasn't changed, which is essentially the break and retest of resistance, what seems to have turned support at 10.3, 10.7, it's taken 2 months and still no move has materialized from this area. So that's what I mean by the cost, if you will, to high time frame trading and how things can really drag on. You can go through 2 months of price action without an idea neither playing out, so no move from support higher, but also not being invalidated because the level's holding. And that's just something you've got to deal with. And my suggestion and my personal evolution in my trading has been, in order to cater for this slow-moving nature of high time frames, I still use the same levels, but have developed some intraday strategies around those levels to fill the time and actually give me more trades and opportunity to make an income, right? That's something I've talked about on previous webinars. Maybe we can do a deeper dive in one of the sessions, but just to provide some context on the monthly, this is where we are at now. So in terms of upcoming closes, I think a close above the upper boundary would be positive. So that's above 10.7 on a monthly basis. That would just look like a good chart because you have a break of the level, a retest that goes quite deep and has spiked previous month's low here, okay? And then closing above support, that's about as bullish a close as you can make it. And short-term targets would then be, I think, previous month's high, right? Even if you treat this as a kind of range, spike the low, close above support. First trouble area is the range high or the previous monthly high. And then I think the monthly level at 14K, that's kind of the bullish, most aggressive, best case scenario, whatever adjectives you want to use. What is the kind of still bullish retest, but slightly more conservative or neutral? Well, I think any close within our support shelf or cluster at 10.3 or 10.7. So in this case, any closes above 10.3, I would still argue are closes at support. It's less bullish and less certain than a close above 10.7, but it certainly wouldn't be enough to make me bearish, as it would just be a case of our shelf is comprised of 2 levels, 10.7, 10.3. Close above the top would have been the most bullish scenario, and then close within the bottom is kind of second best, right? So if we have to settle for that, we have to settle for that. Great. And then obviously the bearish case from the monthly close would be a close below the lower boundary, so below 10.3. That to me would suggest that support is broken and this price action we had above it is a failed breakout attempt through the level. And then I'd expect, because we're dealing with monthly timeframes here, a significant move lower towards monthly support at 7.7. So for those of you who've watched the first trouble area video on my channel, when I'm trading levels on a certain time frame, I'll normally use levels on that time frame for direction. So if monthly support holds, I generally expect a move towards monthly resistance. If monthly support breaks, I generally expect the move towards monthly support. It may seem like the swings are super crazy or large moves are unreasonable, but when you're trading high time frames, it's just how you get your bearings, or at least how I get my bearings. And also, it doesn't mean that the market is just going to teleport to that next level straight away. It is just what the direction I expect the market to travel towards, and we can always use lower time frames to get some context between these big areas. So that's kind of what I'm looking for the monthly. And the final point I'll make is there are obviously no guarantees with candle closes. We could get a bullish close that ends up in a nuke, or a bearish close that gets bought up. There are no guarantees, right? We just have to deal with what's in front of us and use the available evidence. What I will say with regard to that is when I'm looking at monthly closes, as I said, the close is fallible. It's not perfect. So I will typically look one time frame lower on the weekly time frame to see if there's evidence of that monthly close, bullish monthly close, but in the weekly time frame after a week or two isn't following through. That's reason to have doubt over the accuracy of the close and vice versa. So this essentially comes back to alignment. If we get a bullish monthly close, I'll be looking at the weekly closes for alignment, bearish monthly close, weekly closes for alignment. It's simply not practical to wait for monthly closes for trades and triggers and management and all that type of stuff. So the monthly will give me an idea, and it's really the weekly that will prove whether the close is useful and or reliable, and will probably be the basis for specific trade levels following the end of the month. Does that make sense so far before I hop down to the weekly? Thomas Reinhardt says yes, or he says yep. John is bullish. Someone else was bearish. Freddie is looking for swing shorts. That's fine. I don't have any... If that explanation helped you, by the way, make sure to like the video. I see someone's already done that. Thank you very much. I appreciate that. So yeah, I'm kind of on the same boat, in the same boat as Donald, whereas with so many high time frame closes coming up, probably slightly clearer once they resolve, but we will look at lower time frames for evidence of direction. So on the weekly time frame, so that's the monthly, right? I think the clearest case will be built from the monthly close and then the weekly reaction to the monthly close. But I think the weekly is definitely worth looking at. If we look at those same levels, the 10.3, 10.7 for the monthly, we can essentially assess that alignment that I talked about and look at how the weekly time frame has been reacting to those levels. It was a bit choppy initially, right? Where we've got a close below the level, right? And then close kind of at the level. This isn't necessarily a reclaim type of candle for me. It was indicative of chop to some extent, but as we discussed on stream, we had the move from 10.3 to 10.7. I know some of you caught that. I personally didn't. Tough tits. Now, with where the market is right now, it's finding support at the 10.7 boundary, right? Which looks pretty decent. We had the close above the level, and then last week's candle wicked to the lower boundary and then closed on top of the upper boundary. So that looks pretty positive, right? From what's available, it looks like the lower boundary has been tested as support and got bid up, and price is currently being accepted above the upper boundary. So that looks fine for now. What worries me about the weekly time frame, like on this Monday, I do think we'll see another dip. And the reason for that is, if you look at the anatomy of the weekly candle right now, there's kind of been no low put in, right? There's no weekly wick, no visible weekly wick at the moment anyway. So if I zoom in slightly, in my experience, it's just not very common that you get weekly candles with no wick and it kind of just opens and flies off of the open. I would expect at some point during this week, certainly if the market is bullish, a dip into 10.7 to form the low of the week, and then providing that acts as support, continuation towards the next high time frame level at 11.5. And we can kind of see what that looks like on the daily time frame. So that's kind of the only red flag, is that I don't think we've yet put in a weekly low. And this kind of candle structure so far, while the candle's forming, suggests that we've still got a low to put in this week, right? So if we look at our levels, I think the daily time frame is probably the most conflicted one in terms of building, whether you want to build a bullish case now or later, as the title suggests. So the conservative option, in my view, would be to simply kind of almost take the Donald approach. I don't mean to strawman him or anything, but this cluster consolidation structure here, which I have no issue with, falling closer to 11K. Really good level, right? It was the bottom of our range during this consolidation, fell through, acted as resistance, and the market's now testing its lower boundary now. So I think it's totally reasonable. And if you want to be conservative on the daily time frame, the argument is essentially we've got high made at resistance, pullback, so low, high, higher low, and this is a potential area for a lower high given it's a retest of resistance, right? So maybe not the best place to long. And what is the higher probability long, at least on the daily time frame? Well, it would be a break of resistance, right? And then any pullbacks into the level or any consolidation or just any entry trigger once the level is broken, which would be obviously something like this. We can then, at least on level to level approach, look at the weekly level at 11.4 and then the daily level at 11.8, or basically just kind of more towards the top of this range, because if the red box, if we just take this whole consolidation, I suppose the easiest way to draw it, we take this whole consolidation, the red box is more towards the bottom of the range, and if we get strength through 11K, I'd expect to move towards the top of the range, which is closer to 11.5, 6, 7, 8, however you want to delineate this area. I don't think it's the clearest in the world, so I'm just going to probably take it one level at a time. So there are essentially two arguments to contend with. One is that if you want the safe entry, it would be on the break of the red box. At that point, you'd have a break in market structure as well. As I said, low, high, higher low, and then this would be a higher high. So after that, break in market structure would look to buy support. That's totally reasonable. I think the more conservative, or the slightly more aggressive case in this instance is, as I've argued previously, for me, 10.7 is a huge level of, resistance at the time. And what did we have? We had a failed break above it, closed back below, found resistance at the level again, but now we've had two daily closes back above the level. So for me, the conservative option, yes, break through 11K, but conservatively, given the weekly candle structure, that I'm looking for a weekly low to form and a kind of dip from this area, which would make sense. I think a pullback to this 10.7, 10.6 level to find support, that's probably something I'll look to take, depending as always on the intraday price action. And then first trouble area 11K, but probably if this holds, I don't think that resistance is going to do much, and we trade higher towards the top of the range. That's what I think is reasonable. And as I've argued before, I generally don't get bearish on double fake outs at a level, right? So for me, 10.7 was resistance. We had the failed break above it, very bearish sell-off, so it should have acted as resistance at the level itself, right? So this should have been resistance. Instead, we had fake out number one here, and it looks like we've got two daily closes. I mean, one full one and then one TBD or TBC, to be confirmed, whatever you want to call it today. If we get strength, acceptance, or basically stay above 10.7, it's just not very common that price fakes out twice. So close above, nuke, close above, nuke. I just think that second close above nuke is less likely than price simply just finding support at that level and then trading higher. So looking at intraday timeframes with that in mind now, so you can see starting to put a bit of a picture together. If we get I expect to get some sort of I'd expect to get some sort of intraday pullback from this area. At least it would make sense given weekly candle structure, maybe from this pre-breakout range. And we know that we're at daily resistance here as well, 11K. So a pullback from red box resistance from the daily and intraday time frame into blue box kind of expected support at the 10.7 level. So for me, it's the most bullish scenario, arguably, pull back into here and then pretty much full send. First trouble area probably gets smashed, and then we essentially fill in most of this down leg closer to 11.5. I think that's about as clear as I can make it. And I don't think I've got anything else to add on the intraday timeframes. And you can see even just on intraday timeframes, looking at 10.7 just makes sense in terms of candle structure, support, resistance, whatever you want to call it. It's a nice level. I'd be a bit generous with it and maybe include the pre-breakout cluster here as support. So long story short, I don't want to get positioned here like right now. If I had to pick, I'd sell it. But given we're above my main level for directional bias, I'd normally just look to buy dips into the level or look for setups at the level instead of just hoping momentum is going to take us higher. So something like this, pull back into the blue zone, if I can be so generous. I'd look for on my usual lower time frame entry triggers and look to take that higher pretty much towards the top of the range, however you want to define that. So obviously, where is the bullish case invalidated? Well, as we said, the monthly is contingent on 10.7 and or 10.3 holding. So if 10.7, which is currently expected to be support given we're above it, if we get failure at this range and that's just not where the buyers want to step in, well, at that point, we're dealing with another failed breakout, as painful as that may seem, right? This is the level. We know it's got quarterly significance, weekly significance, like it's a big area, okay? Intraday, clear as day. Pull back into this level. I'll look for hourly, 4 hour, 15 minutes, whatever entry triggers to get long into whatever the top of the range. But if that fails, right, which would simply, I mean, that would be pretty shocking if it does. And by shocking, I mean, not surprising, but I think it would just look really bearish and just completely nuke through. If that happens, surprise, surprise, this would be the failed breakout portion. And I think at that point, the monthly time frame will simply drag it down to 10.7. Sorry, 10.3. Like in my view, the monthly close will happen close to or not terribly far from either 10.7 or 10.3. So given we're heading into the monthly close, where do I want to do business? Well, 10.7 or 10.3. Given 10.7 has currently failed to act as resistance and it's expected to be support as we're above it, I'll look to buy this level because the invalidation is really close by. And if it fails, I'm not going to try to knife catch any of these lows or these levels, and I'll expect settlement closer to 10.3. Anyone with me? Did that make sense at all? Kind of where we're at now and levels and ideas and all that fun stuff. Almost at 100 likes. Thank you again for all your support. PM says, where would you place your stop loss if you catch along at 10.7? It would really depend on what it does there. Ideally, it would give me something risk defined at the level itself, like a close below, close above type of structure. But if I had to just do business blindly at the level, probably something wide, either closer to this low or even this low. Something I've been doing over the past sort of 3 to 6 months is instead of having my invalidation, like my hard market stop order, really close to the level where I want to do business to try to get as much risk reward as possible. Instead of doing that, what I'll typically do is take a wider stop, but then cut the trade still early if it doesn't look like what I want it to look like. So whilst, let's say normally I'd have my stop, let's say below this low, and then if I'm wrong, I basically don't get a chance to get out early, right? I'm just wrong and I lose 1 hour. If I have a wider stop, and then price isn't doing what I want it to do at the level that I had in my trading plan, that I can cut the trade earlier for minus 0.5 R, for example, and take a smaller hit on my trading account, and it just gives me a bit more freedom to manage the trade, as opposed to, well, okay, I'm long, and I'm either going to get invalidated fully for a full 1R loss, or I'm right. Instead of that, having that binary setup, by having a wider stop, it allows me to actually more calmly assess the situation closer to the level, and maybe, more often than not, get out for a half-size loss as opposed to a full-size loss. Now, yes, that does mean the reward is also smaller, because, I mean, the risk, I've got a further way in validation, so risk-reward isn't as great, but I found that my trading decisions are generally better when my price isn't teetering near my stop all the time. So that's the answer there. MT, what if it nukes to 10.6 and then bounces immediately? Again, I wish I could come up with very clear counterfactuals for every single scenario. If it does this, I'll do this. If it does this, I'll do that. But as a discretionary trader who will look at a multitude of candle closes on different time frames at a level, I simply can't. My system just doesn't cater to like that extent of binary planning or analysis. So I'll just have to make the call when I see it. I know that sounds boring, but I wrote a whole thread a few weeks back on discretionary trading and kind of my approach over time. So a lot of it is decision making on the fly and contextual and viewing support resistance more as a kind of spectrum, all of that type of stuff. Is Gainsey coming on this Friday? You bet. Is 13.9 still the target based on the monthly? Let me just delete these lines real quick. So on the monthly time frame, I think the macro target, if I can make up such a term, is 13.9 as the next big level. But as I mentioned in the beginning of the stream, I think for a lower time frame and shorter term, man, this is so uncomfortable. Hold on. As a shorter term, lower time frame first trouble area, just looking at candle structure, I'm comfortable saying we've spiked previous month's low, right, here. And then if we close bullishly, first trouble area before 14K, because that's a crazy swing, would be previous month's high. So target 1 would be previous month's high, and then target 2, 14K. There might be some other structures on the way on the daily, on the weekly, but those are the ones that really matter. And also that point I made about the weekly not yet putting in a wick, we can see the same on the daily time frame. Like daily low hasn't been put in yet, so I still think the available evidence from the daily and the weekly suggests that we get some kind of dip to 10.7, or essentially this pre-breakout consolidation at 10.6, 10.7. So this is probably the next area where I'll look to do business. My bias will be on the long side, and hopefully something reasonable sets up. And again, when it comes to high time frame levels, while I generally try to do business at the level itself, so like on top of 10,760, I'm cognizant that wicks are common occurrences, and price will likely violate high time frame levels a bit more deeply. You know, there's less room for precision, and you kind of got to give it a bit more breathing room. So for me, any dips which hold this kind of pre-breakout range at 10.7 to 10.6, I mean, $100 range when dealing with a monthly level isn't too unreasonable. This will be my support and structure for directional bias. I'll look to get positioned within it. I mean, the bottom will provide the best risk reward / invalidation, but within here is kind of where I'll look to see if the long idea has any weight. If that fails, then as I said, pretty much level to level, 10.3, that's where I'm looking for support. If it doesn't want to give it there, that will suggest that we get a close closer to 10.3. So 10.7 is where I'm looking for. Give me something. If I eat shit, 10.3 next target. Okay, I would love to present to you this amazing scenario whereby, because again, so much of this YouTube analysis ends up being crap because I've just said 10.7 is a key level, right? Let's say something like this happens. Next week, I look really clever saying, oh, well, look, 10.7, you got a dip and then the market ripped. I was right. And then let's say something like this happens. I can say, well, look, 10.7 was the key level and then we broke it and therefore we went down. So I was right as well. It's just so useless, right? Which is why I'm always very reserved in my analysis, because I can't tell the future. I can't even tell you what the candlesticks at the level would look like and whether it's going to trigger this or the other for me. Most of the time you see analysts say, well, look for longs here, but if it breaks, I'll flip short. I know very few traders who can consistently do that and like immediately recognize invalidation, and for the market to be in such a space that they can actually act on their invalidation, flip bias, and catch the move in the opposite direction. Like it's kind of a fairy tale level of TA at that point. So I'm not going to try to sell you that. Let's see if we have any cool questions. Nawab, I don't consider Elliott Wave for kind of anything. It's not about faith in Elliott Wave theory. It's just I've never been trained, I guess, in Elliott Wave theory. So it would be unreasonable for me to have strong views on it. Danny says, when do you plan to have your entry triggers article out? This week. This week I'm going to try to sit down and write the entry triggers article. So look out for that. It'll probably be one of my best or most useful educational pieces. So I'll try to keep myself to that deadline. Any new projects on the horizon? Well, I'm without internet right now. I'm at my, I have to travel to my sister's house. It's just a total pain. But projects-wise, nothing too crazy. Just more content for myself, my channel, and Technical Roundup. So I guess that counts, right? So yeah, that's Bitcoin. I hope that makes sense. At least the levels are clear. If they're not, I've done something terribly wrong. Long story short, I'm not even going to do the summary because you all know what to do at this point. I'm looking for dips at 10.7. If I get something nice, I'll long it towards 11.5. If I don't, I'll look for a monthly close closer to 10.3, and I'll use my discretion at those levels to see what happens. That's it. It's the best I can do. ETH. And if you have any questions, just ping them in the chat and I'll do my best to come back to them. So ETH, as we discussed on Casual Friday, is kind of entering TA limbo state, where you kind of end up going around in circles to some extent. I've said to some extent like 10 times. But anyway, so we had 380 to 390 is a really big level. It's a monthly level. It's a weekly level. You know, it's this previous swing area. We broke above it, use it as support, and now we're below it, using it as resistance. The overall conditions are like, so where's the market right now? The market right now, technically, because it's below the level and finding resistance there, it's bearish, right? It's a bearish retest of what was support and has now turned to resistance. That's the pure technical side of it. However, every technical idea has a certain time constraint, I would argue. That if the market really is bearish, it shouldn't be stuck at resistance for, you know, weeks or whatever period of time, depending on the time frame. Or if the market is bullish, it shouldn't be stuck at support for X period of time. You know, you'd expect follow through sooner rather than later. So I think ETH is hitting that annoying spot of uncertainty, whereby yes, the technicals are bearish because this level has failed and has been retested as resistance. But the fact that it's been essentially, you know, 3 weeks or maybe 4 weeks, depending on how you interpret it, and there's been no continuation to much clearer levels to the downside, it's less bearish than it would be otherwise. Another way of saying it is the longer price spends close to closer to resistance, 380, 390, and the longer it spends without nuking from that level, the less bearish it is. So that's kind of what I mean by TA limbo, where the technicals say one thing, but the fact that they aren't materializing pushes back against the existing bias. So yes, it's bearish, it's a retest of resistance, but the fact that it hasn't done anything in 3 weeks makes it slightly less bearish, okay? If that doesn't make sense, let me know. I'll try to rephrase, but I'm kind of running out of analogies or whatever you want to call them. I'm kind of mixed on ETH, to be completely honest with you. So market structure is still bearish because we made a lower low on the drop, right? Let me just quickly delineate that. By the way, can you let me know blue pen or red pen? Or maybe green pen. Let me know in the chat which color pen we want. I think red is the one. Blue is a bit too contrasty, but you know, the things that really matter. So on the last drop, we made a lower low, or like a lower low close, which is something I pay attention to. I know some market structure guys would argue that, you know, you've got a low, you've got a higher low. I think that's fine, but I've generally had more success with higher high and lower low closes as opposed to wicks. I don't think one is better than the other. It's as long as you're consistent, I think it's a matter of preference. Where I'm less clear with ETH is that there are two levels I like, but it's not entirely clear which one is correct. Now, the good thing is we don't have to choose, but let me make the case really quickly. So this was the lowest close in that consolidation, and up here was the highest close within that consolidation. So if you want to make the bullish case, it's that we had a close below the level, got bought up, and now we've closed above the level. Again, not terribly impulsively. This isn't screaming moon quite yet from candle structure. You've got wicks, and nothing really yet. But if the upper boundary acts as support, that would suggest a retest of high time frame resistance at 380, 390, our kind of magic red box. Okay, so that's one interpretation. or one level, one choice of levels. The other one, if you're using the point of the recent breakdown, which is here, the basic argument is that ETH is at resistance, right? You've got the lower low close here, and now it's rallied into prior support, and that's where you'd expect a lower high, technically, right? So you've got whatever lower low here, so we're then looking for lower highs. Where do we look for lower highs? It's at resistance now, so it's kind of bearish. Whatever. I personally wouldn't take this setup. I don't think there's anything wrong with it, but I've just got an absolutely terrible track record with selling lower time frame levels of resistance ahead of higher time frame levels of resistance. I don't know if anyone has a similar experience. I almost guarantee you do, but we've all been there where you identify a level in the market, you think, right, yeah, there is a slightly better structure above it, but like I really want to get short this market, so this is good enough. You take it, you know, you get a bit of a reaction, you feel kind of happy that you didn't wait for the level, and then it just completely shoots by, stops you out, and then nukes from the level you planned to trade in the first place. Like, we've all been there. I've been there way too many times. So for me, I think this is technically valid, I guess. But I still think either way, the clearer trades are going to come from 380 to 390. So on the long side, if we just make this our red box, kind of like we did for Bitcoin, I think for the long side, no surprise, I just want to see this level broken, and then I'll look to ape long into the top of the range at 430, and then likely much higher. This is kind of 380, 390 is the best technical level on the chart. So any break of it, I'll be looking for excuses to get long, essentially. So that's what that will look like. And again, when you're playing high time frame big swings, another distinguishable factor when it comes to high time frames and low time frames is that, as I've said before, with lower time frames, there is a more stringent requirement to be precise with your entries, simply because the move you're looking to capture, or the space between your entry and FTA, is necessarily smaller. So the degree of precision needed to have a reasonable or actionable risk reward is higher. On the opposite end of the spectrum, if you're trading between high time frame levels where there's a shit ton of space, the requirement to be precise, if you're going for bigger moves and there's more space to capture, is lower. So it's more about the idea as opposed to the entry. Some will disagree with that. It's just, again, my personal experience. Totally reasonable views to disagree with all the above. There's no gospel here, just my opinions, right? Kind of like we wrote in the newsletter, which is freely available. Go sign up, link in the description. Comes out tomorrow, actually. So if you want to get our consolidated views on the market, technicalroundup.com, it's free. Go check it out. The two areas where I'd rather do business, yes, I do think there is a valid trade idea to be made here. I just don't think it's as good as the one I'm going to present. I'm going to happily sit on the sideline. So the levels I want to do business, surprise, surprise, are above market and below market. So even if we're just being purely long biased, red box above is pretty much the best level on the chart. So if it breaks, I think that'll just be insane. At least in terms of technical, I mean, look, I'm not being melodramatic here. In terms of technical significance, that would mean a lot. So I'd look to get long with FTA at 433 and then likely much higher into the highs and then just trend continuation at that point. So that's kind of the business I'd look to do at the upper red box. Now, would I resell it? Maybe. Maybe is the answer. I know that's not terribly helpful, but I don't trade with limit orders anyway, so I can't give you binary or direct answers as to, yes, I'm selling this, or no, I'm not selling it. The only thing I can say is if I were to resell the red box, given we've kind of retested it arguably 3 times, and this would be the 4th test, if I were to get involved at this level, I would need all of these highs to be cleared out, and I'd look to do business at the extreme of the upper red boundary. So what that would roughly look like in terms of structure is a push that takes out all of the highs in this consolidation, and then this is probably where I look to sell closest to invalidation, and then see what happens should the market pull back. If it starts finding support anywhere in the red box, I'd bail, look to get the hell out. If I can catch a sell-off, even kind of like from A to B, that might be a trade in itself. Okay, so that's kind of the argument for the upper red boundary. I think longs at that level, if it breaks, will be favored and much more clear, obviously. But if I had to sell it, it would need to be at the extreme of the boundary as opposed to the underside of the level. Okay, so that's kind of how I'm looking at this 380, 390 area. And in terms of, again, even if we're just being purely long biased at lower levels or at support, I'm not in love with structure in the 300s, to be honest with you. I know some have boxed out this kind of cluster pre-breakout consolidation at 320. That's clearly done its job, right? That's where the past couple bounces have originated, so it's a clear level. But for me, because it's got no high time frame basis, I don't think there's anything here on the weekly. I certainly, if we get a pullback or, you know, a continuation or anything bearish, this isn't the kind of level I'd look to rebuy on a third test. And at that point, I'd be looking for the higher time frame support close to 300 to be reached. With that said, gun to my head, there might be a short side continuation trade on a break of this level into higher time frame support, but it would really depend how everything looks. But that idea isn't offensive or unreasonable on its face. So long story short, for ETH, the clearer trades, I think, are break of resistance at 390. I think there's a lot of capture to the upside should that happen. Top of the range 430, then much higher. Pullbacks to support, for me, would have to be around the 300 handle. That's where the high time frames align, and that's really where I'd look to do business. For bearish scenarios, tentative, it would need to be at the extreme of the upper boundary, so close to 400, literally do or die short. That's kind of the only reasonable case I can see, given we've retested this level 2 or 3 times, and or should the market be generous enough, a bearish continuation trade from the 320s into the aforementioned high time frame support. And let me just quickly check the intraday timeframes, see if there's anything different. But that seems to be my current understanding. Yeah. I think that's fair. Yeah, on the last thing I'll say is those are the really clear high time frame trades. Anyone gunning for intraday stuff, I think 357 or just this consolidation, well, sorry, this level, but I've just added the boxed out the pre-breakout consolidation here. That's a pretty decent pivot, kind of like Bitcoin. If we get a pullback in the markets, Bitcoin to 10.7 and ETH to 350, I might get an intraday trigger to buy this into previous lows at 378. But also, no surprise, 10.7 Bitcoin, 350-ish ETH. If that level fails, then I think we're going to get monthly closes at much lower prices. So that's ETH from the weekly, daily, and then some intraday stuff if it's clear enough. Does that make sense? Was that helpful? Tanner says, don't forget to drop a like. I completely agree. 145. Thank you very much. If you don't use limit orders, how do you deal with lower time frame trading in view of the fact that crypto trades 24/7? I'm not sure how 24/7 means that limit orders are the only viable strategy, I guess is my answer there. Most of my trades end up being price at or near one of my high time frame levels that you see on the chart, and then me making a discretionary decision based on lower time frames to enter a trade. And this is something I can talk about happily at more length. But as I've said, my system has evolved over time to be less, I guess, systematic. That, okay, setup A has triggered, therefore I take this trade with these parameters. It's gone from that to a more kind of open-ended, am I seeing support? Am I seeing something that's risk-defined and just based on thousands of hours of screen time and experience? I still have loose visions for what a setup kind of looks like. But more often than not, it's stuff that jumps out at me and also stuff we've covered in previous sessions. Hirikium asks, regarding intraday trades, if target is not reached within time frame, do you close wherever price is at deadline? No, I will very rarely use pure time-based invalidation, like, okay, hourly entry has to reach target by the daily close or whatever. It's mostly price action and price-based for me. That doesn't mean that time isn't a relevant element, but it's not the determining factor. Let's look, I mean, these Bitcoin pairs aren't doing much. Let's look at Link. Did anyone get long Link from when we talked about the extreme of support here? That bounce was absolutely mental. Again, my current circumstances don't allow me to take advantage of a lot of the stuff. I just don't like trading away from my setup. It just, yeah. I mean, maybe I will if something really jumps out, but I just don't feel as comfortable. But we talked about Link pretty much at the bottom, right? And where this level comes from, it's right at the bottom of this weekly cluster. And the weekly close is actually pretty crazy, all things considering. So we're essentially trading from consolidation to consolidation. This is one of them. Again, this box is just these two lines drawn as a box. Doesn't mean the whole box is support. As before, it's really the upper boundary. That doesn't make sense. Upper boundary and the lower boundary are the ones that really matter. Okay, so we had the most bullish close you can have at structure, whereby it pierced below the lower boundary and then closed well above the upper boundary. Now that still kind of suggests you get a retest of support here. Like, that wouldn't be unreasonable. I think one of the best ways to lose money trading candle closes is by having really tight stops and no expectation that support is going to get retested, right? So let's take this red box as an example. You're looking for a reaction, let's say on the weekly time frame. It gets a close above, and you're like, okay, close above support, that's great. I'm going to buy, like, market long this, and then target, the next level, which is totally reasonable. Now, what markets will often do, or at the very least, you shouldn't be surprised, if you get a bullish close, and then it comes back to retest that same support before then giving the move, right? So if I suppose the practical takeaway there is, if you really want to get involved in a market, and you get a really clear signal from a candle close, doing business on the close is fine, as long as you're prepared for a retest of support, and you don't get stopped out at support following a bullish close. I think that's something I had to learn the hard way. I would just market buy closes and then be in shock and horror and awe as support would get retested. I'd get stopped out at support, and then the close would play out just without me on board, right? So if we get something like this, pull back to support, I think the next trouble area is 113 to 118 sats. I still think this is a valid range. If it fails at the upper boundary, good chance that we revisit the wick. But for now, I think the easiest move has played out, right? From the extreme of support past the level, and it's kind of at the midpoint between levels right now. If momentum continues, I think one way or another, either via a retest or directly, there's a good chance price gets to 113 to 118k. So nothing too crazy for now. And you can see if it pulls back from here, wouldn't be the ugliest chart in the world. Still very reasonable. Link USD, again, talked about it at 7.5 as our trend support on a level-to-level basis. Very similar type of structure. Hit the lower boundary, closed above the upper boundary. For me, I think we even talked about this level on the daily time frame. FTA has kind of been reached on this close here. So that's absolutely fine. To get repositioned at this point, a retest of support would be something I'd look for, especially when price runs away from a level and doesn't spend any time there. Usually when it comes back on a rounded retest, some really good stuff happens. So when you see this type of aggressive price action, where you get like a close at the level, and then the next candle just fully engulfs and flies away from the level, if price ever comes back to it again, it's still very much valid support, not least for a quick intraday reactions. That's something I'd still look for, levels valid as ever. But for me, again, just like the Bitcoin pair, the easier trade from support to FTA is played out. So I'm going to need something to develop in order to get repositioned. I think if you're just not interested in current prices and you're either waiting for 4.5 or some other big level, the higher probability positioning, if you're not against buying strength, which I don't think you should be if we're in a strong trend, is back within the $13 to $14 range. If it establishes support back here, I think $17 is almost inevitable, and at that point, I think there'll be enough impetus or momentum or whatever made-up term you want to use to take price higher. And if not, well then, it's the good thing about Link, as we wrote in the newsletter, is that it behaves really well technically. So even if you're on the wrong side of a macro whatever trend, if you just trade it level to level, you'll still be absolutely fine just because it's so liquid and behaves so well. But I'd be keen to know if anyone caught Link and how that went for you. If you didn't, well, welcome to welcome to my house. I'm not sure I said Link was short. Certainly not when it was at support. I think I even disagreed. Someone said, I mean, that's not my recollection of events. But I'm happy to be corrected. If you can let me know where I said Link was a short, but I certainly remember speaking of this as support, so that would kind of surprise me, but what do I know? Memory loss is not the most surprising or uncommon thing in the world. Friedrich says, everyone buying Link at this point is super retarded. Perhaps, but if it's going to trade well in terms of the technicals and give setups, then, I'll just take what's in front of me. Flambeur says, missed by 0.006 cents. Jeez, tough one. So yeah, that's Link. I think the easier moves are done, and it just remains to be seen what happens from here. Tezos just absolutely fried, not even not terribly keen on even discussing this at the moment. I think it might be at support-ish. No, not really. It's just fallen out of the range. We can speculate on a long idea, given it's done this, right? So this is the weekly range. Hold on, let me just do this. So it's visible. Here we are, that clunky touchpad I'm sure you can all hear. So this is the weekly range in Tezos. What I like to box out is the consolidation, which led to a range breakout or breakdown. So in this case, just this price structure here. Okay, so if the market were to rally and close above whatever 2,500 or this consolidation, I think any pullbacks or any bullish patterns or whatever else would be good to go. Ideally as close to the range low as possible to maximize or to be nearest to invalidation. And at that point, get a swing long into the range midpoint and potentially the range high as trouble areas. In terms of where the market is right now, if we use the previous range, support, resistance, right? So in the middle of nowhere. In the middle of nowhere, not terribly keen. There might be a dead cat bounce setup, just because how close the market would be to invalidation at the range low. But as I said, my preferred setup would be to let the market do whatever it wants here, give me a range reclaim, and then we have really clear targets to play to in the form of the range midpoint at 3K and then 3,500 range high. Until that happens, this is just a very bearish close back below the range, and then we have to let price do what it wants before acting, or at least I do. That's how my stuff works. That's kind of the big stuff covered, unless I'm really missing something. Or anything on the watch list that I may have missed which went ballistic. I don't really think so. Yeah, YFI doesn't look too great at the moment. But yeah, any questions, comments, concerns? SXP, I think I had a look at SXP. It was trading really well technically before it took a massive dump. I'm not terribly sure where it is now. Hold on. There isn't a good weekly chart on this, is there? So, look, the weekly, we can just pretty much use the weekly, at least against Bitcoin, for bias. So if we just use this pre-all-time high consolidation, range low at 15s. Oops. Oh man, this is not pleasant. There we are. Range high at 19s. At the moment, I see this, or this is setting up as a weekly time frame bearish retest, right? Lowest close. And again, I would take this with more of a pinch of salt than usual. All of my stuff should be taken with a bag of salt. But especially so when we're dealing with less price history. The technicals are generally less reliable than they otherwise would be. But for now, range low, finding resistance there. So weekly close back above 15. Think that's where longs would be favored, at least until the top of the range. But for now, just based on the weekly, against Bitcoin at least, and the daily, you can see that as well. It's basically the consolidation which led to the breakdown, and it's currently being retested as resistance. So not terribly keen on it at the moment. I would say there is support here, so we might just get a bit of a range on SXP against Bitcoin, but until the weekly time frame looks a bit healthier, above 15K, I personally wouldn't touch it. I don't know if the USD pair looks terribly different. Maybe it does, because apparently it's above my levels. I don't know where these levels came from, to be completely honest with you. I think we can emulate... Oh no, this is daily levels. The daily on the USD pair looks slightly better, right? It's reclaimed the bottom of the previous range. Support, breakdown, closed above, retesting. So I've got it at support at around $1.5, right? With the opposite boundary range high being at $2. So that looks slightly more optimistic. But the kind of the same warning sign-ish on the weekly time frame of potentially a bearish retest at 1.7. So what does that mean? Well, it kind of means your do or die long is basically this pre-breakdown range in the gray box here, right? The consolidation. Oh, come on, work with me here. the consolidation that preceded the nuke. That's your kind of do or die, bottom of the range, dumpster dive long. And if that doesn't hold, then too bad, right? BTC pair, shitty bearish retest. USD pair, shitty-ish bearish retest, but daily is probably near current prices, simply because of how close invalidation is, favors long. It's not something I'd take personally, and it probably needs to go a tiny bit lower from just how it looks right now with this breakdown, but just some perspective to keep in mind. Okay. This is generally, if you want to use or identify support resistance, supply demand, all of this type of stuff, always look for the consolidation or the range or the candles, if you're an order block person, whatever, it's all the same thing, that preceded something significant, like a break in market structure, etc., etc. So where was, where did for example, this range, using this lowest close here, or even using the wick if you want to be slightly more pedantic, like where did support break? Well, it broke on this candle here, right? On the daily time frame. There you go. This is when the candle was, this is where this key daily support, which led to all-time high support, then it was broken in this instance. So you kind of work backwards and say, so that's a significant bearish or bullish, in this case bearish event in the market. What preceded it, or what came before it, or where is the pre-breakdown range? And then you just go lowest close, highest close, and that's how you delineate your structure. Fairly straightforward, right? So it's kind of a reverse engineering process. First, you look for the significant event, a breakout through a range, a break in market structure, some sort of shift, and then you work backwards and see what happened before that, or where are the candles or the range or the structure that formed before that significant event. Then you identify it, and you have higher probability turning points in the market. Oh, ETH BTC, bloody hell, good point. So I suppose going back to the title, what is the argument for some form of Bitcoin resurgence was the fact that the daily technicals and the weekly technicals look better than ETH USDs because we have a close above support and we're expecting it to get retested at 10.7, whereas ETH on the weekly looks worse than Bitcoin on the weekly. So that's kind of part one. And part two is, ETH BTC is kind of questionable. Right, so if ETH BTC looks bearish, that favors Bitcoin longs, right? If the market's bullish, of course. Now, the reason for that, and the reason it's a tentative case as well, is really not much has happened on the weekly time frame. If we look at the levels which matter, the top of the range at 36s, resistance, bottom of the range, pretty much highest close here, acting as support, and the market's just really not done anything in between. By the way, this is a really good example of what I mean by you first find the break, like the significant event, like the break in market structure, and then you look at the candle or what happened before that. So for example, you had support here for ages, right? Support, support, support. You get a breakdown through the range. Okay, so what happened before that? Where is the lowest close or highest close, the consolidation that formed before that took place? Well, in this case, this for me was the lowest close, good level of resistance. This was the highest close, good level of support, right? So that's, again, not the most textbook example in the world, but not a bad litmus test for these things, okay? Yeah, so EPTC, look, the weekly kind of ambiguous. I wouldn't be comfortable having strong views. The daily is sort of similar. If we just use levels, right, like the high time frame levels we're referencing, it kind of shows what we saw on the weekly time frame, whereby not much has really happened. You got to close below support, and then you got to close above it. That's typically a bullish pattern. So I kind of expect this level to get retested, because that's normally how this works. As I said, when you get aggressive price action at a level, like a close below, then a close above, which flies away, or just like a wick into an engulfing candle, which flies away from the level, more often than not, price will come back and retest. Again, not a guarantee, haven't got like strike rate, expectancy, data, probability, bullshit, whatever, on any of that. But that's just from observation. Really, when price spends not much time at a high time frame level, more often than not, it will come back and get retested in one form or another reasonably soon, or certainly before, or very likely before the big move happens, right? So ETH/BTC in terms of levels, like still fine. We can assume support has been reclaimed. But in terms of market structure, it looks a bit more busted. If we take the lowest close within the range, right, you can see we close below that. So on the closing basis, you have a break in market structure, and now rallying into a level of resistance, which is essentially these prior lows here. So I suppose, again, not the strongest case in the world, which is why the title isn't put in any certain terms. But if Bitcoin finds support at 10.7, and we get a bullish monthly close, and all those things we talked about earlier in the live stream kind of come together, and ETH BTC looks like it looks right now, that would generally suggest strong Bitcoin, ETH USD not as bullish as Bitcoin, that being reflected in a weaker ETH BTC. Those factors would lead me towards the conclusion that if we get bullish continuation in the first couple of weeks of next month, should the monthly close be bullish, I'd generally expect Bitcoin to outperform ETH in some portion of that month if those conditions are satisfied. Does that make sense to anyone? Again, that's kind of more spitballing, shooting the shit. I'll just kind of trade what's in front of me level to level sort of stuff, but sometimes it's helpful to build a case or be aware of a case or rebalancing or shift from one asset to the other, you know, just kind of have an idea of what to expect. Because there's nothing wrong with, there's nothing more annoying than getting a correct read on market direction, and then you just end up being long all the laggards and the shitty positions while all the other positions are just flying. It's kind of frustrating. I'm sure we've all been there. Only privacy coin that makes sense, Monero. I broadly agree with that. Yeah, that's kind of all I've got. I don't have any strong views on the S&P as of now. I am comfortable with the levels that I've got, if anyone cares. I think the Duck's got something very similar, and just a lot of people do, because it's technically unambiguous to some extent. Lowest close at all-time high, highest close at all-time high, so the kind of range at previous all-time high, I should say. Broke down, very bearish, found resistance, fell back within the range, found support, and now kind of chopping between range high and range midpoint. So that's kind of dollar index. 3220s, 3300s, 3380s is my high time frame levels. A bullish dollar index at this point. Again, last area where it found resistance is the range high. This level here, again, not the cleanest in the world in terms of candle closes or whatever, but you know, we could even take some liberties and draw it thusly. So any higher high closes would probably be very bullish and bought towards at least this cluster here, if not the highs, simply because of how close they are. But while we're within the range, I'm pretty much going to expect resistance at the range high, support at the range low, and the midpoint to be kind of your intraday trading base until proven otherwise. But for any trending moves, I suppose that's a clear way of putting it, any trending moves, I'd need either the upper boundary or the lower boundary to fail. And right now, I'd say short-term bullish directional bias, simply because we are trading above the range midpoint. Okay? And I'd expect, again, not my market, not a market I trade, so again, bag of salt as usual. If there were to be a pullback towards the range midpoint before reaching the range high, I'd expect that to be bid into a test of the range high, if not the highs set to the left here. That's S&P for me right now. Metals. I think I had some gold levels. Not terribly sure where they come from. I think they come from the monthly. Yeah, they come from the monthly. So we're dealing with the previous all-time high range, kind of. Range low, using this highest close, turn to lowest close, turn to last layer pre-break. Really good level. And then on the upper side of things, highest close, kind of my preferred level, and then all-time high wick, or the first high made, I should say, as a level up here. This has been trading really cleanly in terms of the technicals, so fairly straightforward. Breakdown, expecting resistance at 1910s if it rallies, and I expect that to take price to the next monthly level at 1820s. For any swing type of positions, I'd either need 1820s to break, in which case I'd expect a move towards 1560s. Again, there are levels in the interim, right? That doesn't mean, so it doesn't mean it's going to go there in one candle, but generally I'd expect a move towards here. Alternatively, if this is a failed breakdown and we get a higher high, or basically a reclaim of the level, something like this, right? Then at that stage, this price action will be the failed breakdown, deviation, whatever, get back within the range and expect trend continuation higher. But for now, I'm just going to interpret market structure as it presents itself. We have monthly support, really good level at 1820s. So far, we've broken down from 1910s. So short-term bearish, I guess, with invalidation being strength through 1912s. That's gold. And look, these levels are really good. And they've kind of proven themselves on an intraday basis as well. I think silver, someone asked as well, Zag. I don't think I've even got this charted, to be honest. Yeah, I mean, I'm comfortable using similar technical structures. Oops, that's kind of not it. Lowest low close on the monthly time frame, found resistance, and now retesting the nearest range, I guess, in terms of structure. You could argue this is curve fitting, but whatever, doesn't really matter. What am I going to do here? It's not my market, I trade. So these are silver levels, right? We can just use the monthly time frame. It's not going to revisit this terribly often. Let me zoom in here. Silver, I don't know who trades this. I don't. Turned at resistance. Previous lows, whatever. Resistance. Monthly close will be coming into this previous. It's just moving from range to range, right? Consolidation to consolidation. I think if we get a close above 23.5, 23.5, 23.5, good chance we bounce back and fill in most of this bearish month. If we close back within this range at 23, well, again, level to level, playing it to 19. I think these are the three levels that really matter for silver, at least if you ask me about a market I don't trade. There we are. Any questions? Bitcoin, ETH, BTC, metals? Anything unclear? I'm not going to do chart requests. Maybe we can do a separate live stream with chart requests, but I don't think this is the one. But if we get 200 likes, I might reconsider for next Monday. Wink, wink, nudge, nudge. Edge of the bell curve says, do you trail your stops? Interested as most of your stuff doesn't cover this, and I found it to be a tricky area of volatility of crypto. I don't normally trail my stops simply because, well, I mean, it depends what you mean by trail your stops. You mean in like an automated way, like a percentage move, and I'll just trail like the nearest swing low using like a high-low indicator? Something like that I won't do, but I'll manage trades, right? I'll certainly manage trades that start going in my favor prior to reaching first trouble area. But that's kind of the closest I come to trailing stops. If I do it, it's not automatic, and it's based on my discretion and evolving risk to reward as the trade moves in my favor prior to hitting first trouble area. Suppose that's my answer there. Take a final look at Bitcoin and maybe do a quick summary. Is this thing really going to start running away? No, not yet. So yeah, Bitcoin, monthly close, above 10.7, great. Within 10.3 and 10.7, fine / good enough. Below 10.3, bearish. Okay, just not great. Now again, monthly close doesn't mean it's going to just teleport straight away from the close. It could touch support before going higher if it's bullish, touch resistance before going lower if it's bearish, etc. I never market order on high time frame closes, just not my system, but it will provide context as to how I approach these levels in the days and weeks to come, right? Shorter term trading, we've had a breakout at the quarterly level at 10.7. So my bias will be towards this area or this whole consolidation, the pre-10.7 break acting as support. If we get a dip into here, certainly at the extremities, I'll be long biased looking to play a bounce at least into the point of the breakdown / first trouble area, but ideally higher towards the top of the range, closer to 11K. Okay, so 10.7, if I get something risk-defined close to validation, I'll look to buy that. Okay, can't tell you the perfect entry trigger, I just don't know what the candle's going to look like, but, you know, if it's support, and it's both intraday support and high time frame, I know this level is significant, I'm certainly going to have an open mind should we dip back into that level, okay? If 10.7 fails spectacularly, specifically the consolidation, you know, this, I'm drawing it here quite liberally. If this area fails back to support, but then that would suggest the monthly close will be closer towards 10.3. I'd love to sit here and tell you some amazing flip, like, oh yeah, well, I bought 10.7, then I flipped short, and, you know, I caught the move either way. Most technical analysts, most, not all, who tell you that kind of, okay, well, look, this is the pivot, and then you either do this, right, or you do this, and you make money both ways. I've literally seen, like, Trader SZ, couple of others be able to do that on a consistent basis. Most just take one side and eat shit and don't flip, and or take neither side and just want to look clever in the follow-up, right? So sure, this is technically valid, but I'm trying to address this towards traders. There's a good chance it doesn't work like that, right? But basic TA, this is sort of it, if that's your cup of tea. 10.7, look for a bounce is what I'm going to do if I get something. If that fails, I expect a monthly close towards 10.3. If you can do some magic flip, doodah, miss the right setup, miss the wrong setup, get the right setup, etc., kudos to you. Not generally how trading works, in my view. ETH, monthlies and weeklies still kind of crappy. I'd rather do business on a break through this kind of 380, 390 area. I'll look to long that towards the top of the range at 430, or look to buy support closer to 300. The only setup in the interim between levels, if I had to have a gun to my head type of thing, as I mentioned, would be a bearish continuation setup from, oops, that's not correct, from this kind of 320s area where we've bounced a couple of times towards my higher time frame support at 300, something like this. Again, almost zero chance it looks like this and looks so nice, but the technical idea is there, the blueprint, if you will, and then the lower time frames will have to inform any decision making there. In terms of where the market is right now, yes, I think the best resistance level is at 380, 390. There is an intermediate level of resistance around here, closer to 360 or 370, but generally, because when I have a decent level and a fantastic level above it, I almost never sell the decent level, because unless I've got really good reason to do so, it just simply doesn't end well. Doesn't mean I think the idea is invalid, it's just not a trade setup that I generally take. And ETH BTC, kind of going back to the title, is there a bullish case for Bitcoin outperforming ETH, etc.? I think if we get all the bullish closes that I talked about on Bitcoin, it starts to run. ETH BTC is showing some weakness after breaking market structure with a lower low close, currently at resistance. So I think if we are in for trend continuation on higher time frames next month, my bias will be towards Bitcoin outperforming ETH if all of this kind of stays reasonably similar. That's all I've got. Make sure to leave a like on the video if you enjoyed the summary. I know some of you stay for that thing, so hopefully your short-term attention span has been satisfied. Subscribe to the channel if you haven't already. We're almost at 10K. We'd love to have you on board. Thank you to Bybit for sponsoring Technical Roundup. Speaking of which, the newsletter, also Technical Roundup, comes out tomorrow at 8 UTC. The link to that in the description, also free, so we'd love to have you as one of our readers. For now, that's all I've got. You've got the duck on Wednesday. I'll be probably trolling the chat, and then I will see you for Casual Friday with Gainsey. Thank you very much. Take care, everyone, and thank you for all the support.